Morning, John.
Good morning, John.
What's up?
Good morning. How are you?
Good.
Doing well, thanks.
So I'll get to the question. Has to do with insurance. I am currently in a term policy that I took out about 14 years ago to cover, just in case I passed, that cover for the house and any of the bills that were left over from different credit cards and stuff like that. I just got an email from the insurance company because it's getting ready to, the term is up in 6 years, and said that I can go ahead and transfer it to a whole life insurance policy without doing any of the other medical exams and things like that. And I don't know that I need it, and I don't know how to go ahead and evaluate whether this is a good move or a bad move.
Well, let's talk about first whether or not you need it. So tell us a little bit about your situation. Are you married? Have children?
I'm married. All my children are out of the house, married and have their own kids. I am planning on retiring in 3 years. I will be debt-free at that point, mortgage-free, and I already have a prepaid plan for
Burial?
For burial and stuff like that.
Okay.
And so, John, thanks for that. So if something were to happen to you, you say you're retiring in 3 years, I'm going to assume, maybe it's better to question, are you prepared financially for retirement? It sounds like on the debt side you are. You've got the debts paid off, but do you have savings and investments to help support and presumably Social Security?
I will have Social Security coming in when I apply for it. I'm not planning on applying for it until I'm age 70.
Gotcha.
I have a military retirement. I would have a retirement from my current position, and I'm also disabled veteran, so I get some of that information or that money coming in, and I've got over $500K in savings.
Okay.
Gotcha.
Let's back up to the retirement from the military and your current employer as a pension. As I think you know, when you retire in those pensions, you have some options in terms of what payment schedule you want to take. You can take what's called a single life option. For our listeners, that means that you get the biggest check that you can for your lifetime, but when you pass away, that check stops. And then you can take a survivor option, which means you get a lesser check, and when you pass away, your spouse generally gets 50% or some amount. Do you know what option you selected or what option you're going to select?
When I retired from active duty, I selected the 55% option for my wife.
Great.
And for the one that I would be retiring from in 3 years, have not made a selection on that, haven't considered it yet.
Okay. Go ahead.
Well, so John, here's the idea. First of all, I commend you for asking the question, and yes, it's pretty typical that the insurance companies will come out to you and offer a permanent form of life insurance, which, by the way, the premium is significantly higher, all things being equal. And so the goal really with insurance, and you bought this policy, I think you said 14 years ago, you were probably at a different place then than you are today. And the goal is to ultimately work yourself into a position because of your savings and your preparation and planning that you no longer need the insurance. And it sounds like to me you're pretty close to that point. If something were to happen to you, your wife would have at least some pension income. We haven't talked about Social Security, but there would be a benefit out there is what I'm hearing, even though you're waiting until the last minute to build that benefit up as large as you can. And so I think it's really a function of your lifestyle, and would those income sources and what your wife could reasonably draw from the savings support the lifestyle that she wants. If the answer to that is yes, then it sounds like to me you've done a great job in planning, and you would not need to continue the life insurance beyond the term, right? And you've got 6 more years to continue down the path. What is your age now, John?
4.
How old are you now?
64.
64. Okay, so that'll take you to 70. So that, you can continue the term policy until age 70. Social Security will kick in. You've got a couple pensions, and you've got savings and investments. that should continue to grow for you. So it sounds like to me, again, it's a functional lifestyle, and as long as those income sources and what you can draw from your portfolio would cover the income that you need, then it sounds like to me you're not going to need the life insurance beyond its term. And so therefore, I personally would not be looking to just spend more in premiums when you've already got a policy that's going to take you until 70.
One thing that I'd like to know, John, how's your health? Has your health changed at all since you originally applied for that policy?
No, I'm in good health.
Okay, great. Let me tell you one thing that you may want to consider. You haven't pulled the trigger yet on the option, the pension option where you currently work. There is a strategy that we call pension maximization that you may want to look at. And we have a lot of clients that come to us from one of the big corporations here in Orlando, whose name I won't use, but whose initials are LM. And they have a pension, and what we have done for many of those employees is done what we call a pension maximization. And what that does, it allows you to take the maximum benefit that you can get for your single life, and then you look at the delta, the difference between what you would get and what your spouse would get if you passed on. And oftentimes that delta is far more than enough to cover a nice insurance policy that in the event that you drop dead tomorrow, your wife would get as much or more, sometimes on a tax-free basis, than if you took the survivor benefit.